This right here
Hmm.
is me.
Huh?
I'm preparing a video about the artificial intelligence bubble in March 2026. Let's begin. What is a financial bubble? A bubble forms when the
Huh.
price of an asset rises very quickly, far above its real fundamental value. The price rises mainly because people believe it will keep going up, not because the asset has become more useful or more productive. In simple words, prices rise because people expect them to rise further. Example: year 400,000 BC, Caveman Auto. This guy right here.
Right.
Caveman Auto
Come on.
plays with two rocks. Auto
Huh?
makes fire. Auto touches the fire burns. Auto thinks. Auto's smart. Auto has an idea.
Hey.
Auto spreads the news about the
Yep.
magic light. The whole tribe wants to see the magic light of Shaman Auto. Auto becomes the god of the tribe. The tribe worships Otto. Otto appears on social media and in the news. Everybody talks about Otto. Otto promises future riches in exchange for offerings. The tribe brings offerings
Right.
to Otto. Cavemen take loans from the bank to give
Huh?
offerings to Otto.
Hi.
Then lightning strikes a tree.
Yep.
Now everyone has fire. Fire is now worth nothing. Otto is now just a clown. Otto's stocks crash. The investors who trusted the mighty Otto, the investors lose everything. Whose fault is it? Otto's fault? No, it's your fault. You are an idiot. A new technology appears. The technology promises to change the world. Banks, funds, and markets start investing in the sector. Investors stop buying based on logic. They buy because if everyone is making money, I will make money too. Stupid mindset. Typical signals begin to appear. Companies with
Yep.
no profits are worth billions. Narratives are used to justify any price. The revolutionary technology turns out not to be so revolutionary. The price returns to its fundamental value. The fall is as violent as the rise. A bubble does not mean the innovation is useless. The
Yep.
dot-com bubble burst in the 2000s. Many companies disappeared. But the internet really did change the world. The bubble removes excess speculation. The bubble does not remove the technology. What is the AI bubble? The AI bubble is a financial phenomenon forming around companies, startups, and technologies related to artificial intelligence. It's a bubble because company prices, invested capital, and valuations are growing much faster than these technologies' ability to generate real income. Rock. This rock is like AI. The rock is useful. It helps you hunt, but it doesn't cook your food. It doesn't catch fish. It doesn't give you an oil foot massage. A rock is just a rock. The rock is fine, but it's
Yep.
still just a rock. Now the world is presented with the rock as a revolutionary invention, the solution to all your problems. What problems, you might ask? Irrelevant. The only problem they have is a mountain of money. They want an even bigger mountain. This is Nvidia. Nvidia alone represents around 8% of the S&P 500 index. Nvidia has a massive influence on the sector's economy. Nvidia is the engine of AI. Nvidia makes the chips needed for AI. Chips are like pickaxes. If you want to mine the shiniest rock,
Yep. Yep.
you pay Mr. Nvidia. Because Nvidia controls around 90% of the AI chip market. This concentration makes the system fragile. If Nvidia's valuation drops, a chain reaction is possible. But how did we get here? This is Caveman Bill. Caveman Bill invests billions in infrastructure and strategic partnerships. He funds startups and large-scale AI models. Caveman Bill gives money to Caveman Sam at OpenAI. Sam buys chips from Nvidia. Is Nvidia happy? No, never enough. So Nvidia also invests billions in AI startups, and yes, it also gives money back to Caveman Sam. Meanwhile, stocks keep rising and money just changes hands. AI startups raise capital without generating income. The business model depends on getting more investment later. Capital flows in circles that reinforce the illusion of constant growth. More money, more startups, more chip demand, higher valuations, more investment. But this doesn't create real value, it just redistributes capital. Scale of the investment. We're not talking a few sheep and 4 chickens. Over $500 billion is flowing into AI infrastructure in the United States. Meanwhile, this is you. You're playing League of Legends with Cheetos stained fingers. Life is good. But no, you're dreaming. Because RAM prices have gone up so much you can't afford a computer. Component companies are ignoring buyers like you and focusing on big AI corporations. You are a victim of the system. The current fall, what is Warren Buffett doing? This is Caveman Warren, a market genius. When everyone runs toward AI, Warren Buffett does the opposite. He doesn't make big bets on AI companies. Through Berkshire Hathaway, he stays cautious in the sector. Buffett says AI is a dangerous technology, unpredictable, hard to value. Warren is smart. He doesn't invest in what he doesn't understand. You, yes, you, should be more like Warren. Stop giving your money away while the market is euphoric. Warren accumulates cash, and when Buffett accumulates cash, it usually means there's more risk than opportunity. Global situation could accelerate the burst. World markets are already showing weakness. High interest rates, persistent inflation, record debt, and dozens of geopolitical conflicts worldwide. If the economic environment worsens, oil prices are rising due to tensions in the Middle East and risks around the Strait of Hormuz, a key route through which a large portion of the world's oil supply passes. If it gets blocked, prices surge, fuel becomes more expensive, and markets fall in a chain reaction. The AI bubble could deflate much faster. What happens next? Like with the internet, AI won't disappear, but if a bubble exists, what will disappear are the useless companies. Market corrections could be 10 to 15%. And as always in financial history, when enthusiasm is extreme, risk is also extreme. That's when we see who has real technology and who just has a story. What or who is behind all of this? Caveman, follow the trail of bills. Thank you for watching the video.